Hello everyone, and welcome back to the channel. In today's video, we're discussing a financial trend that's becoming more noticeable across the United States. Why many Americans are spending less and becoming more cautious with their money. This shift in spending habits is not driven by a single event. Instead, it reflects a broader sense of uncertainty shaped by rising costs, financial obligations, and long-term planning concerns. Understanding this trend helps explain how households are adjusting their priorities. One of the most important factors influencing spending behavior is the cost of everyday essentials. Expenses such as food, housing, utilities, transportation, and insurance take up a large portion of monthly income. Even when prices stabilize, the higher baseline cost continues to affect household decisions. Savings behavior has also changed. Many Americans are focusing more on building emergency funds rather than discretionary spending. This shift suggests that households are prioritizing financial security over short-term purchases. Interest rates play a role as well. Higher borrowing costs can discourage large purchases such as homes, vehicles, or financed goods. Monthly payments become more expensive, which encourages consumers to delay or reconsider spending. Credit usage patterns offer another insight. When interest rates are elevated, carrying balances becomes more costly. As a result, many households try to reduce debt exposure, which limits spending flexibility. Employment conditions also influence confidence. While jobs may still be available, concerns about job stability or income growth can encourage caution. When future income feels uncertain, spending decisions tend to become more conservative. Housing expenses continue to shape financial choices. Rent, mortgage payments, and related costs often determine how much room remains in a household budget. Because housing is typically the largest expense, it strongly influences overall spending behavior. Healthcare costs add to this caution. Medical expenses can be unpredictable, leading families to keep larger savings buffers rather than increasing consumption. Consumer sentiment surveys often reflect these concerns. When confidence weakens, spending patterns adjust accordingly. Reduced discretionary spending can be seen across entertainment, travel, and non-essential retail categories. This slowdown in spending does not necessarily mean economic collapse. Instead, it reflects a period of adjustment. Households reassess priorities, balance risk, and focus on stability during uncertain times. Financial markets may react differently from household behavior. Market movements are influenced by many factors, including corporate earnings and global developments, which don't always match consumer experiences. Government economic policy discussions also influence public expectations. Budget planning, fiscal decisions, and long-term strategies take time to materialize, contributing to uncertainty in the short term. Global economic factors add another layer. Energy prices, supply chains, and international developments can affect costs and confidence within the U.S. economy. Technology and workplace changes continue to reshape how people earn and spend money. New opportunities exist, but transitions can also introduce uncertainty, especially for households planning long-term financial goals. Spending trends offer valuable insight into how Americans feel about the economy. When households slow down spending, it signals caution, preparation, and a focus on resilience rather than reaction. This video aims to explain these changes clearly and responsibly, helping viewers understand why spending patterns are shifting and what they may indicate about broader economic conditions. Thank you for watching and staying informed. Continued updates will be shared here as financial discussions evolve.